Good day, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for November 1st, 2021, and we're sitting here right now in the neighborhood of about 4:20 p.m. Actually, probably in the neighborhood of 5:20 p.m. Central Time. I'm trying to get my time straight. I'm 2 hours different than Chicago. Yeah, it's 5:28 p.m. and I'm looking at the time there. I'm in Mexico right now, so normally I'm in these videos and I have the benefit of my green screen behind me and I can talk you through the markets. And we're not going to do that. We're going to just use my computer. I capture it and we'll post these. It could be another week. I'm probably going to extend this vacation, not dramatically longer, but it's so beautiful. Why come back that fast? The trading, I think, is pretty good right now. Now, also, there's action going on in politics. Joe Manchin is now again throwing the wrench at the Democratic Party, saying, nope, they're not giving him the details he wants on this reconciliation bill, and he suspects that they're going to sandbag him and make it a lot more expensive than it is. So now he's saying, the Senate's already passed the infrastructure, past that, and then they'll deal with this, but he wants a lot more details on what this reconciliation is going to be. You saw that. You saw President Biden is in Europe. I don't think they got much out of the G20. Everybody's got to get home and make sure that their own legislatures will go along with the new tax plan, which I do think benefits the rich countries. I'm not convinced what it does for the really poorer countries. And then in COP26, all I saw was our president today. Of course, Fox, who is the Republican station, as we know, they were sitting there showing him nodding away, which I think that's hard to argue that wasn't going on. But whatever. So let's take a look at Tesla. Up and away. It just doesn't stop. Another 8.5% gain today. And this is as its competitors are rolling out their first vehicles. So here's a market that I know nobody believes in this. You get all the naysayers, but you're now at $1,200. Just think of what the worth is and how much Mr. Musk is just gaining in his own personal wealth and how he's just blowing everybody away. And as you can see, here you are up. You've got the swing line up with higher lows, higher highs. The market's staying over the 18-day moving average of closes, so the trend up, the buy is up. And instead of just staying over the Bollinger Band or under it, it's back and forth, moment by moment, gets under it, gets over it, on closing basis even, not keeping the market excessive, and you have an embedded slow stochastic reading. If you don't know how to play these type of moves, you should take my enhanced Bollinger Band course because it will give you an idea on it. Then you take it from there. In Apple, you lost the enhanced Bollinger Band on the close today. I think the pros came out of their longs, but I think they actually came out of the longs. Here, this is what I teach. The first time you hit an upper Bollinger Band, you take off money at that number. Then you're buying on the breaks here. There's a moving average you use, and it depends on the rule whether you're making a higher high or not in an uptrend first, and then how you come in, and then you liquidate the rest of your position. You've already kicked out 50% here when you lose the embedded reading, and that's what I think happened. So today, right through here is where the market was lost. Did you lose the embedded reading on Friday on the deeper break? Do you see that? The answer is no. Here, while the market was down 277 at 149.80, today you were down a little bit, but it was right at the end of the day, and that's fine. But I do think the pros are out of this market now. In ARK, it just keeps coming to the upside. Now, it is very overbought. Will it embed? I have my doubts about it. The upper Bollinger Band should be attracting people coming out. I understand that some might be buying on these pullbacks. I'll wait. Too overbought for me to tell you to do anything. XLI, the industrial sector. So when the market lost its embedded reading, and if you take a look, it was right here when you had that 77 reading, it came back the next day and re-embedded. That's the only time you can do it. Look on the left. You see the 81.15? Kept it, and it's still there. That is the bear trap. Now, it's a sign of weakness that you lost it once, but you don't give up on the trade until it's completely lost. It's that simple. In the XSD, the semi-computers, look at how they're just taking off. They don't give ground. When we were back here, I told you, and I said it over and over, you couldn't get me to tell my clients anything bearish about a sector where you've got a 2-year plus backlog, pricing power, and I don't care what the chart says. I don't have to play that. I wait for the buy signals. You don't have to play the down signals. And that's where I think the chart is. You'll get more chances in this. You never buy over a Bollinger Band. Cannabis, well, it's holding the lower Bollinger Band. Is it going to embed again? Now, take a look. You are right here, both numbers under 20. Next day, both under 20, and today. So you have an embedded reading. The pros might sell this tomorrow. On a rally, they'll look, I think, probably the first 30 minutes of trade, see if you're over the 20-day. If you're not, they're going to hit this market. Not 20-day, the 20 reading in the slow stochastic. I'm sorry I said that. XHB, the S&P home builders, did we embed? Well, you lose the embedded reading. Day 1, 2, you're back to fully embedded. So on pullbacks, as long as you don't take out today's high, I think the pros are going to buy this market looking for another surge until the red line closes under 20. Now let me come back to that. Until the, and I want to come back to XHB. I was just there with you. There it is. Until it closes under 79. I said that wrong. I'm sorry. I love working in my studio more than I do here. This is trickier for me. In XLE, the energy sector, I have made it clear I don't think that you should have or traders should be trading this while the COP26 meeting is going on. You just never know what's going to be said. There could be a big announcement, something, who knows which way it would move the market. I tell traders not to do that while meetings go on, big ones where everybody's there and you don't know what's going to happen. I would take this arrow and point it here. You now have a higher high, lower low scenario. I see no trend whatsoever. In GLD, lower highs, lower lows, so you go back to neutral. Neutral is the 18-day average of closes. I call it the line in the sand. Notice how the market's refusing to close under it. It keeps the bias up while the trend is down, and it's working off an overbought condition. Gold miners, today I was telling my subscribers, do nothing in this market. Let it drift down wherever it wants to go until gold itself finds its footing. Copper, this is where I'm looking for all the support between the 18, the 100, 200-day average. This is where I think you're going to see it. Don't be the first kid on the block that you have to own it. The time to come out of this market was back over here. When you lost your embedded reading, there was plenty of time. The market has dropped back down. You'll come in again if the market gives you the signal. TLT. Was that the run-up where the curve yield ended narrowing? I don't know. The chart action is just overbought. It's saying stay away from it. Last in the FXE. Higher high, lower low, back to neutral. Truly nothing to do there. Take a look at this if you want to learn more about the enhanced Bollinger Band course.